G'day everybody, this is Johnny Seville from Acorn Wealth Corp, and this is your executive summary for stock setups for Thursday. So I hope everyone had a wonderful Christmas day, wonderful Boxing Day today, getting out there to all the deals and bargains. Some people did in the stock market too. We saw we had an interesting couple of days here since we last spoke virtually to one another. What you can see here, if I just zoom in a little bit, you can see that obviously the upward channel on the S&P has played out beautifully well. You can see that we've had this wonderful drop down from the upward channel, coming very close to the target of 230 on the SPY. So nice big long drop, worst decline, worst Christmas Eve in history, worst December since the Great Depression. Obviously, we had a rally up in today's markets. So you can see a big push up on the SPY. I think every 504 of the 505 stocks in the S&P 500 went up today. There's only one stock that actually went down. But once more, I mean, let's have a look at the factors. Obviously, one, this is an oscillating bounce. We were going straight down, and we've gone straight up. So this is so far an oscillating bounce to the upside. That's factor one. Factor two, let's have a look at the high yield bonds. Um, Here we go. Just coming up there. So let's have a look at the high yield bonds. High yield bonds was again an up day, but if you have a look at the volume, was nothing impressive. I mean, as you can see, the volume down over the 20th and 21st was 68 million and 56 million. Even on the 19th was 32 million. Today's volume only 25 million. So despite the bounce up, the volume really hasn't come with the move. So naturally, these are support areas where a bounce was due. A bit of short covering, a lot of short covering probably, and we're rallying up into that moving average from underneath. So right now it's still kind of a bit of a wait and see. It's too early to tell if this is the bottom of the market. We've certainly had 90% of the high probability move. So again, going back to the SPY, the high probability short on this market was right up here at the top. Down, then we had another opportunity, then we had another opportunity when we broke through support. So obviously the short, the high probability of where this was all going was upward channel. Therefore, that meant a drop all the way to 230. So we've gone from 295 all the way down to a low of 233. Right. So that's what, 90% of the move. So I guess what I'm saying is we have had the really easy to predict stuff has now occurred. Now we're into the let's wait and see mode. So obviously open range currently is bearish. The open range on the SPY, as you can see, is here. So we did have a bearish open range because we closed below that range that was set on the third Friday of the month. So on the third Friday of the month, the high and the low becomes important support and resistance. If we close above that range, the market is close to 90% probable to close within that range or above by the end of the month. As what happened here is we closed below that range, which means approximately 90% probability that we're going to close inside these two orange lines or below at the end of the month. Now, as you can see, end of the month is 1, 2, 3 days more of market action, and then of course it's New Year's for the markets closed on the 1st. So we'll see what happens here. But 3 days left. I would not be surprised to see a little bit of a further push up to around this 248 area. Maybe even a little bit higher, and then if we and kind of consolidate and then roll back over would be the bearish argument. But we'll just have to wait and see. Let's have a quick look over at the stocks. But I mean, and so, but the main thing, I guess, that I'd like to relay to you is, uh, you know, the most important thing here is to evaluate your your trades position by position. So if you are so the only two things that matter right now are your targets on your trades and your stop losses on your trades. Everything that happens in between is noise, right? What you need to be concerned about is, where is your stop loss? Where is your target where you take some off the table? Where is the next target? Where is the next target? What happens in between really doesn't matter unless it changes the pattern that's driving it down. And from what I've seen looking at these stocks today, there really isn't anything that I'm observing that changes the pattern that I like in these individual companies. So I'm just going to go over now to these individual stocks to give you some updates, and there we go. So of course, the SPY also had its. So the SPY's been dropping down towards its target. You can see that obviously we had that nice little head and shoulders there on the S&P as well. There you go. That, as you can see, was the head and shoulders breakdown. So again, if you want to know why the market rallied, I mean, again, it's all technicals. This is a beautiful technical market. And in my opinion, this is all you need to understand to continue to making awesome calls. I mean, I don't know anyone out there that's been picking it as well as we have at the Acorn side. So I'm thrilled to have you with us. So again, look, we talked about that head and shoulders on the S&P. We talked about the upward channel. Both came into that kind of that target area. So naturally, you've got a bounce. Now, I personally, I'm not really too worried about this market bounce. I would be surprised if it turns into a rally. I think still we've got some trouble here, so I mean, we'll see. But I'm still quite happily short, and we'll talk about some of those. So anyway, that's the market. Grub. GRUB. So again, talking about targets and things like that, GRUB hit another target, obviously, of 67.73 on Monday. Had a little bit of a bounce today. As you can see, the stop's still at 85.64. I wouldn't lower that until we break through support. So as you can see, we're now rallying. So wherever we reverse from this rally, and drop break through that support will be where the new stop loss would be, but right now too early to tell. But yes, did hit a target on Monday. WTW, I would consider lowering the stop on this though, down to 47.28, just because this has already had a nice breakthrough of support, and normally I would wait to see this rally in reverse, but there's a lot of room between 37.87 and 52.13. That's a lot of room, so I would consider taking some partial profit on this one, because it's down around 10%. So I would, and it got so close to the target. So, I mean, if you were looking at this on Monday and thinking, what should I do? That would be a scenario where I'd take some profit because it's close enough to the target. Um, so I still consider taking some. And that is, by the way, and maybe I didn't mention this, if you are concerned about the market rallying and you've made a lot of money, especially if you've got like puts that are up hundreds of percent or whatever, and you're concerned about, well, what if the market rallies? I'm really worried about giving up a lot of my profit. Then that tells you mentally you're really happy with how much you've made so far. And that would suck if I lost a whole bunch of that. So if you would be happy, let's say that you sold today and the market rallied 8% from here, would you be really happy with that result? So if so, don't worry about what potentially could happen. Lock in profits if you're worried about that. So I mean, look, there's nothing wrong with taking half of your portfolio and going to cash if you're worried about a market rallying. Same if you're worried about a market going down. There's nothing wrong with taking a third of all of your positions out and taking that to cash. work within. I don't know where your portfolio is at. I don't know what your risk profile is. I'm just wanting to give you some ideas because you don't go broke taking a profit, of course. So there's another idea on WTW. TRTN. And of course, if you're really worried about it, you can always sell everything. It's totally up to you. But again, nothing wrong with taking profits. TRTN, this one hit its first target yesterday, well Monday at 29.13. I would the next target now is 19.57. I'm holding this one short as well. NTAP. Oops. So NTAP, I would look at. No, obviously we're holding puts in this one. I would look at lowering the stop signal to 62.57, but this is also very close to its first target at 54.13. So again, nothing wrong with taking some off the table if you wanted to. Again, look at these. But look at these charts. Look at the volume. You can see here in this red bar, like you can see it behind the candle. That's volume. Look at the huge amount of volume on the 20th and more importantly the 21st. Big, big, big volume to the downside. Did you see any real volume in today's candle? Barely, well, maybe a third, right? So as aggressive as the bounce is, I don't think that represents buying. I think that represents short covering because it's just no real volume there. But I could be wrong. But I would at least look at lowering the stop to 62.57. And with any of these, nothing wrong with considering taking some partial profits. DRNA is something that I would consider taking some partial profits on because it has dropped really nicely down from where we first found it at around what was it 1367 all the way down to 950. That's 40% roughly. Well, just a little bit shy of that. So there's nothing wrong with taking some profits on that. But again, look at the huge volume down on that candle. Look at the tiny volume up on these last two candles. So I would once again partial profit potentially, or look at lowering the stop to 12.17. NYT. I sold some of my puts on that this morning. This obviously hit its target of 22.13, first target, so I took some profit on that. I'm still holding puts in it though, and we'll continue to watch this one. SABR. SABR hit its next target at 21.13 on Monday. I'd look at considering lowering the stop to 22.57, which is above that first target. I mean, again, let's say you got in at 23.87 and you sold a third at 22, you sold a third at 21, and now you lock profit in on the rest of it at around 22.50. It's a great trade no matter which way you look at it. If it was to rally all the way back up and stop out at your first target, you're a winner, sir or ma'am, because that's what an average of around 21.83 right there in the middle, something like that, close to anyway. Okay, so yeah, look at lowering the stop to 22.57. INTU. Are you into it? I am into this one. I actually shorted this just recently. Obviously breaking down from that head and shoulders potential pattern. Again, look at the volume to the downside, bigger than the volume to the upside. If you can look at this in any respective charting tool. But yeah, I'd look at lowering the stop to 204.13, giving it room to move. SPG. Not Starwood Preferred Guest, but Simon Property Group. Again, you can see this one. This one may be forming something of a macro head and shoulder pattern. I mean, I was just looking at this afternoon and looking at where it bounced. Right. So if you look at this, there you go. Looks a little bit head and shoulderish, doesn't it? So my first inclination was to look at lowering the stop signal, but I wouldn't. I would look at a partial profit take. I'd look at some partial profit taking, and maybe just let it play out because this could actually it may end up rallying up to 172, 173, 174, but I mean this to me looks like a head and shoulder pattern. So if we did rally up to 174.20, 174.10, this is actually a new potential short based on these the early signs of this pattern and uh, and um, where it bounced. So partial profit taking here because it got so close to 158.53. I'd leave the stop signal where it currently is, and I'd actually look at a possible new short at 170 or 170, 173.87. Okay, there you go. So that's SPG, EPAM. So, I mean, again, you can see these a lot of these patterns are hitting targets, which is why the need for a little bit of a bullish bounce. EPAM hit entry signal last week. We hadn't specified a stop yet because we're waiting to see where it was going to break down. Now we've seen it. I'd look at setting the stop signal at 120.33. NCLH. NCLH, as you can see, hit its target. I'm short this as well. Hit this target at $40.33 on Monday. So I'd look at setting the stop now at 46.57. And almost at the end. SYX, I'm short this as well. That hit the entry signal on Friday. So I've set my stop at 26.33. HPQ, which I'm short, I've got options and stock short that. This one hit its target at 19.53 on Monday. So, I mean, no matter what happens to the market, they're all winners. I don't know of any short we've had that has been a loser, unless I'm forgetting something. If you traded it a similar way to how we'd looked at it. HPQ, yeah, so I'm still holding my puts and short this. It hit its first target of 19.53 on Monday, and I'd look at lowering my stop to the entry signal now at 21.67 just to again lock in that profit. Only one really to chat about in terms of the longs, because there's not that many of them. MRIN, of course, had an amazing move. That was an entry signal which we'd had around $6, which we text messaged out. Of course, it was originally one we called as a long. In the patterns and probabilities course, we text messaged alerted it out when it was around $6, and then we discussed it again in Thursday night's trading room that if you hadn't already gotten into it, it looked like an entry above 787 with a target of 993. Obviously, it hit 993 quite easily, and we discussed updating the stop loss, and it pulled back in and hit that on Monday. So beautiful long, and what's amazing about this, of course, is that this stock doubled in price from $6 to $12, while the whole market had its worst day in history of Christmas Eve. So amazing, well, worst Christmas Eve ever. And there you go. So that's just the power of patterns and probabilities, power of smart money, and that is the full breakdown for tonight. And again, just a reminder, we are the 27th today, where you are anyway. It's the 28th for me, but I keep my clock on Canada time. 27th. So once again, a reminder that the end of year lifetime offer does expire on the 31st. So you've got a couple of days left to take advantage of the lifetime access to all of Acorn alerts, one-on-one coaching, fallen angels, patterns and probabilities, smart money lessons, mastermind, everything that Acorn does for the rest of your life. Again, that closes on the 31st. That's a hard deadline. And then, of course, we've also got the 2 years of alerts offer going as well, which is getting 2 years of access to all of our alerts and smart money. So check out those two. Offer does end on the 31st. And we'll so if you have any questions about that, drop us an email. Otherwise, it's going to be an exciting day. So happy trading, and again, happy holidays.